Hi, this Vladimir Gortsev, and in this video I am going to talk about the European trading strategy. I began to develop it back in the first half of 2016. Naturally, over the years this system has undergone some changes. A crucial filter has been added, priorities have changed in the assessment of the momentum strength. My subscribers and I have been employing the final version of the strategy for more than 3 years now. Like my other trading systems, which you may already know, the European strategy is designed to work with currency pairs. Where does this name come from? Why is the strategy called European? It's all about the recommended hours of using this system. The strategy demonstrates high efficiency during the trading hours of European stock exchanges. We will get back to this question in a while. All my trading strategies are described in detail in my free course. You can find the link to it in the description of this video. If you are not yet receiving the lessons of the course, which are automatically sent to Telegram every 24 hours, then I strongly advise you to sign up for the course right away. As for the strategy, it has the same basis as the news trading system. Price impulses are used here, but they appear on the charts not as a result of news releases, but spontaneously. In lessons 2 and 4, I talked in great detail about what price impulses are, how they look, why they appear, how you can make money on the market using these momentums. So in this video, I will not discuss these questions exhaustively. This strategy employs price momentums like these, and such impulses may occur on the market for no apparent reason. They can be called spontaneous, because they occur when there are no economic announcements that directly or indirectly relate to the asset. The system is to be used from 7 am to 4 pm, GMT 0 time zone. No, all currency pairs are fit for the strategy. Right here I have prepared a list of currency pairs suitable for the strategy, using the variety and pocket option as an example. The main idea of the strategy is the corrective movement of the market after a strong price impulse. If there is a price momentum on the chart, that is, the price quickly decreases or rises, then a corrective movement soon occurs. Learn more about this in my free course. Our task is to make money on the corrective price movement, even if it is minimal and looks like a single candlestick directed against the momentum. This will be enough for us to generate income. Therefore, a golden rule of the strategy is that the time frame and expiration must be equal. If we analyze a price chart with a 1-minute time frame and look for a price impulse on it, then the expiration time for the transaction should be equal to 1 minute too. If we are tracking down price impulses on the price chart with a 2-minute time frame, then we need to choose an expiration equal to 2 minutes. To enter the market, the chart must have an impulse of at least 3 unidirectional candlesticks of the same color. Bodies of the candlesticks should be quite long. Look at the chart to better understand which candles are small and which are long. Compare the price movements with what was previously on the chart. The longer the candles in the momentum, the higher the probability of an upcoming reversal. According to the momentum scalping strategy, a trade is made strictly at closing of the candle. That is, if we see an impulse on the chart, consisting of several relatively long candles in a row, then we execute a trade in the opposite direction to the momentum when the candle closes. I will give you an example. We see a momentum of 3 consecutive red candlesticks. The time frame of the chart is 1 minute, the expiration time is also 1 minute. The price drops quite quickly and breaks through the filter. Watch a separate video about the filter for the European strategy. The link to the video is available in the top right corner. The filter protects us from taking a trade in a dubious market situation. This allows us to skip market patterns, which can later show long sequences of candles of the same color. Now let's get back to our example. As soon as the third relatively long red candle closed, I immediately entered into a 1-minute call option. I deliberately took the trade that is not the easiest one, because the momentum did not stop there and only began to intensify. Once the trade closed with a loss, I instantly bought a new $30 option in the upside direction of the currency pair market rate. Let me remind you that I use a series of up to 6 transactions, and with changing expiration, which depends on the events taking place on the price chart. You will find details about this in the course. The 4th red candle also turned out to be quite long, which is good. The faster the price moves, the higher the odds of an upcoming market correction. And indeed it is so. The market price turns upside and we get a green reversal candle. The trade closes with a profit. The income from this transaction covers the losses from the previous unsuccessful trading operation. If during the formation of an impulse on the chart you see a candle with a small body or without it, it's okay, just disregard it in the calculations. If more than one candle with a minimum body appears in the momentum, then you'd better abstain from entering the market. This pattern suggests that the momentum is not very fast, which means that it can cause problems. For example, this market pattern is not very favorable due to several small candles. Here it will be possible to enter the market, but only on the condition that several more long candles in a row form in the direction of the impulse on the chart. And one more example, which demonstrates quite well the principle of entering the market in a situation on the chart that is under the filter. If we look at the first 3 candles of the upward momentum, we will see that the third candle has a small body, but a long upper shadow, and besides, it was impossible to make a trade after the third candle because the market situation was under this filter. A long shadow directed towards the momentum of the final candle. Why is it not a beneficial factor? By the way, I call the candlestick, after which the transaction is supposed to be made, the final candle. The shadow, in this case, the upper one, tells us that the price managed to reach significantly higher values than the one at which this candle ended. This means that the market has already corrected down from its maximum value, and only after that, the candle closed. If we take the trade at the close of a candle that has a long shadow directed towards the price impulse, then the prices will not be the best ones that the market has reached in recent minutes. This will be an entry in the direction of impulse correction, but already in the process of this very correction. The 4th and 5th green candles also have medium-sized bodies, and besides, the filter is still active. This means that we have 2 factors at once that prevent us from entering the market. The 6th candle was good, it has a long body, no upper shadow, and on top of it, the price has already managed to break through the filter level. This means that when the 6th green candle closes, you can enter into a put, which I did. Even if there were a slight upper shadow, this would not be a problem. It's worse when the body of the candle is commensurate with the length of the shadow, or, even more so, when the body is smaller than the shadow. Since the time frame of the price chart is 2 minutes, the trade expiration is also 2 minutes. On my YouTube channel, I post videos with trading sessions where I use this strategy. In those videos I demonstrate my trades and also comment on market situations. These videos will help you master the strategy and filter in no time, and in addition, you will watch how I use this system in real-world market conditions. If in the new strategy even 1-minute candle could be sufficient for us to enter, then here the impulse should consist of at least 3 candles. In practice, quite often the entry should be made after 4, 5, 6, or more candles of the same color, following one after another. As we can see in this example, executing a trade was possible only at the close of the 6th candle in the momentum. The 2-minute trade closes with a profit. Finally, I would like to emphasize an essential point regarding the size of the candle. The momentum may include candles with bodies of medium and above medium sizes. That is, for example, this type is also quite adequate. It is important that the candle at the close of which we plan to enter the market have a relatively long body. The previous candlesticks in the impulse are also significant, but not as much as the last one. Let me remind you that in the description of this video you will find links to the brokers, the platforms of which I used in this video, as well as a link to my free trading course for beginners. If you have not taken the course yet, I highly recommend it. To see more trades with the European strategy one talked about in this video, don't forget to subscribe to my YouTube channel. On this channel, I upload useful trading materials and my live trades with comments on all transactions. I wish you successful trading and high profits.